everybody. Today is Monday, October 27, 2025. It's Luther here on another YouTube real estate session. All right, so for those who've been tracking, most of you already know, we're real estate practitioners here in the Kansas City market, investing, selling, and lending, and doing some other stuff as well. And so our specialties are seller financing and investor financing. All right, so appreciate you tuning in. Definitely subscribe, like the video if you like what you hear, what you see, and check out some of my previous videos where I talk about capital, strategy, and operations, mostly as it pertains to investing in real estate, placing capital, and the whole bit. All right, so digging in a little bit deeper today in regard to seller financing. All right, so one of the number one questions or concerns that comes up when I talk to property owners, investors, aspiring investors who are considering doing seller financing, one of the biggest things that comes up is defaults. They want to know what happens or what they can do in the event of a default. Okay, so again, I've talked about this in the past, and I did do a video specifically about the 3 scary D's when it comes to seller financing, one of which is defaults. Okay, so the 3 scary D's, just to recap real quick, is defaults, Dodd-Frank, and due on sale clause. Okay, so definitely check out that video if you have some time and want to know more. But it's fresh on my mind, the default situation, that is, because I had one come up recently. And if you were tuned in, or if you track me on social media, I'm pretty sure I mentioned it maybe 2 or 3 months ago, but I didn't want to say too much because we hadn't worked through it yet. Well, now we've worked through that situation and we have the property or the home occupied again. Okay, so this was the first default or the first house that I had gotten back in about 7 years. Okay, and so long story short, me and a business partner purchased a property in the early part of 2023. We used hard money or a short-term loan. We renovated the property, and then we refinanced and got a good 30-year fixed rate mortgage in place. And then from there, we proceeded to do seller financing, in this case, in the form of a contract for deed. Okay, the residents or the buyers, young couple, they were able to put $15,000 down and they were paying under $1,500. We did raise the payment after the first year because the taxes and insurance had gone up, the escrow had gone up. So they put $15,000 down, they were paying around $1,500 a month, and they lasted for about a year, and they couldn't make it, they didn't make it. And during that time frame, a number of things had happened. They had gotten off track, and then they got back on track again, and then they got off track again. And so we were working with them and being patient with them, letting them know what their options are or were, and they eventually decided to walk away. And so we explained to them, hey, you still have an ownership interest in this property. You can rent it out, you can try to resell it, or you can have someone step in where you left off. Or, besides that, without us having to necessarily go the full-on legal route and maybe having to go to court, they could simply walk away. And so that's what they chose to do. And we got the house back after a year. So I want y'all to, also be mindful about what that looks like financially too, because as my business partner and I are going through this process, coordinating with the residents, letting them know what they can do, we still had to make the mortgage payment. Okay, so regardless of whether our residents are paying us, okay, in this situation, you're talking basically 6 months worth of mortgage payments that me and my business partner had to sort out. Okay, so again, fortunately, we were able to get a pretty large down payment on the front end for the contract for deed. And, fortunately, I guess, or unfortunately, the residents decided to walk away. We did have not only those mortgage payments for about 6 or 7 months, we also had to pay some attorney fees. There was some business expenses in the form of accounting fees and so forth. And then we also, once the property was vacated, we had to pay the maintenance crew to take care of some exterior work, the lawn care and removal of some of the items that the residents left behind. Okay. And so, I'll have to look at all the numbers again to decide or determine rather where we ended up. But I think we still are at least break even or maybe still up a little bit because we did get the property sold again. Okay. So it's about a year that the previous residents were in the home. They didn't make it. Okay. They moved out in July of this year. Okay. So, we just got the place occupied again last week. So July, August, September, October, okay, place was vacant, right? You're making the mortgage payment. We're taking care of the property. I'm going by at least once a week on average to make sure things are cool with the utilities and make sure that the property is secure and so forth as an operator. Okay, so this is part of what I talk about, having capital so you can support the business, right? So you can support the investments and take care of the investments. Okay, the strategy, seller financing, talk about that regularly, and then the operations. Me being on the ground, me being a co-owner of the property and investment firm helps tremendously because I can see each week, what's coming in and what's coming out of the bank account. I can go by the property to see if it's still there, hasn't been burnt down or nobody's broke into it, right? And then I can coordinate with my capital investor, my business partner, and game plan on what the next move is going to be because it was getting kind of hairy, I'll tell you, like we made all the mortgage payments, but not on time. Okay. And so at one point we were trying to decide, were we going to just rent the place? Okay. We were trying to decide, should we just sell it outright? Okay. Or I even thought about potentially refinancing, but okay. The thing about it, all of those cost money. Okay. To rent the place, we would have had to put more work into the property to get it to a standard that we can rent it. Okay. If we wanted to sell the property, you got closing costs, commissions, and I'd imagine that the buyers may ask for repairs. Okay. And then on the refi, right? In order to refi again, there's going to be closing costs, broker fees, and then depending on how the appraisal comes out, we may have to once again bring money to the table to get the refi done if we're getting, let's say, a 75 or 80% LTV loan. Okay. So going through that whole process, you're waiting on appraisals, you're waiting on documents, you're waiting on underwriting for the refi. So all of it costs money, right? So fortunately, we decided, hey, let's continue marketing the property because I had been pushing it out there with some of the agents that I work with, some other investors in the community, and some other people online, Facebook and so forth, trying to get it sold. But it just took a little bit more time than we thought it was gonna take, and we had to adjust the price and the terms 2, 3, 4 times during that 3-4 month period. Okay. And this is a plug also for some of the investors out there who are looking to move product and looking to fill vacancies and looking to, get things rolling a little bit, because there has been some delays in general in the market overall. Okay. Houses have been sitting on the market a little bit longer. Okay. This, transaction that we did just last week got me out of a 4-month dry spell. I hadn't closed anything at all since June. Okay. And then on top of that, this is the first seller finance transaction that I had done in almost a year. The last seller finance transaction that I was able to close, I helped another investor with it, was last year in November, okay? So this is the stuff that doesn't always get talked about on social media. It may get talked about in some courses or masterminds and so forth, but as y'all know, I want to keep it real with y'all so y'all have a much better understanding of what it's like, not just to do a deal or rehab a property, but what it's really like with the capital, the strategy, and operating the business as such, okay? And so, yeah, we had to pay money to make sure the mortgage payment was made. We had to pay the maintenance people, had to pay the attorney, had to pay the accountant, okay? I didn't pay myself anything during this time frame either, okay? And so that's something else that you got to think about. Now that we got the place occupied, I'm, cutting checks and making sure that our people are settled, okay? So I think I covered almost everything I wanted to cover. This was a default situation that I hadn't dealt with in about 7 years, okay? We got the property occupied again, okay? And I'm pretty sure we're up because, okay, the numbers on this last one. The transaction that we did last week was a contract for deed. So basically rinse and repeat of what we did before. This go round, we were able to get a higher purchase price. Okay, we sold it for $163,000 this time, okay? However, we took a lower down payment because the property did need some TLC, okay? So we were only able to get $7,000 down this time instead of $15,000 down. But we were able to charge a higher interest rate and we are getting a higher monthly payment as part of that too. Okay, so again, for those who are interested, definitely reach out. If you want to know more about seller financing, contract for deed is just one way that you can do it to buy or to sell. We usually advise investors or property owners to use it mostly as a resale. You can also explore doing lease options. You can use existing financing, and there's different types of wraps or true seller financing that you can do. Okay, so hit me up if you want to have a strategy session. And then also when it comes to investor financing, as of late, I've really been digging in deeper into what it's like or how we can leverage other people's money more effectively, okay? Along with the investor financing, there's usually your own money or someone else's money that comes into the mix as well. And so being more mindful, okay, now that it's fourth quarter 2025, in some situations things have slowed down, other things have picked up for some people, and the market's different now. So I have really been encouraging my audience, my business partners, customers and clients, those who are interested in investing in real estate, to think more so about having your capital stack sorted out beforehand, if at all possible. Okay, it definitely helps a lot. I know for a lot of us, it's easier to go find an opportunity or what we think is a deal first, and then we end up having to sort out the funding and the financing at a later date. And I have been through it, going through it right now, where we end up, using short-term debt, and we get into an opportunity, and then we had to source additional capital after the fact. But again, I talk about some of this and a whole bunch more on previous videos. And so if you've made it this far, appreciate you tuning in. And again, feel free to reach out. That's it for today. Have a great day. Peace.